So, hi everyone. Thank you, Christian, for the invitation. It's really an honor to be here today for the first time. So, before we begin, I would like to give you a quick overview of Horos Asset Management. Horos was founded in May 2018, which means we are very close to celebrate our first birthday, which is great for us. We currently manage about 50 million euros. And we try to invest in companies that ideally comply with 5 investing principles, which are businesses that we can understand with competitive advantages, some financial profile, managed by good capital allocators, and all of that with an attractive margin of safety. I would also like to introduce you to our investment team, Alejandro, Miguel, and me. We've been working together for the last 6-7 years. And during this time, we've been fortunate to outperform our benchmarks with our Iberian and international strategies. But enough from Horos. Today, I would like to present you our investment idea in Aercap Holdings, the global leading aircraft lessor. This is a quick summary of our investment thesis. The first thing you need to know, this is a structural growth industry. Air traffic is expected to grow at 3.5% CAGR through 2037. Also in this business, owning a global platform is important to deploy and redeploy aircraft in an efficient way. And also the size is very relevant to obtain economies of scale. And we believe that Aercap has both of them. Also in the end, this is a financial business, so we better go hand in hand with good capital allocators. And we believe that Aercap's team is among the best in the industry. All of this is great, but we need obviously our margin of safety, and we believe that currently depressed multiples at which Aercap is trading give us that margin we want. So in order to understand what Aercap is, I think it's interesting to do a quick review of the history of the leasing business. The leasing business was invented by International Lease Finance Corporation, ILFC, in the US, and by Guinness Pitt Aviation, GPA, in Ireland in the 70s. GPA tried to grow very fast, assuming several clients and credit risk, and all of that ended very badly for them, obviously. So they had to restructure in the 90s and do a partial sale of their fleet to GECAS, the leasing division of General Electric. Several years later, Cerberus bought what was left of GPA, and with that, they formed Aercap. And 5 years ago, Aercap acquired ILFC. So in the end, it's amazing that Aercap has a bit of both of the leasing inventors in itself. So we find it very, very amazing to know. Also, this is the management team. Obviously, a very experienced one. All of their careers, they have been related to the leasing business. It is worth to emphasize that Mr. Kelly, the CEO, currently owns close to 2.5% of the outstanding shares. So he has a lot of skin in the game. And that is something we like to see in the companies we invest in. But what does Aercap do? In the end, this is a pretty simple business. They borrow money from capital markets and financial institutions and use that money to purchase aircraft from the main producers and also sometimes from airlines in sale and leaseback operations. Then they lease the aircraft for a 10 to 12-year period, and after that they try to release it again or to sell it in the secondary market. So airlines find the leasing proposition very attractive because it gives them a lot of flexibility to manage their fleet. Also, it reduces a lot their balance sheet risk, and that explains why currently around 40% of the world's fleet is in lessors' hands. This is a very fragmented market. Only 9 players own a fleet with a value of over $10 billion. And Aercap is the biggest by far. They own a fleet with a value of over $35 billion. Another important players, just to mention them, could be GECAS, Avolon, or Airlease, for instance. Let's see some key characteristics of Aercap's aircraft. This is the order book, and the first thing to emphasize is that they are ordering the most efficient, full efficient new technology aircraft. That includes the 737 MAX made by Boeing. It's very soon to know what will happen with that, but if you want, we can discuss it in the Q&A. Also, they are focusing a lot in narrow bodies. Narrow bodies are a much more liquid asset than wide bodies for lessors. And also important to know that 95% of the deliveries through to 2020 are already placed by Aercap, so they have some visibility with their order book there. So as these new orders are being delivered, and taking them into account, Aercap is currently managing around 1,400 aircraft, and 3/4 of that could be narrow bodies for the reasons we have just commented. So the age of the fleet is being lower as these orders are delivered, and at the same time, Aercap is selling a lot of mid-life planes in the secondary market. And this is important because some of the competitors have a lower fleet age, and that is something that the market didn't like about Aercap, but that is going to change. And also the average lease term of the fleet is close to 7.5 years, which is among the longest in the industry, and that gives Aercap a lot of visibility of results. So now that we have understood what a lease is and the main characteristics of Aercap's aircraft, we are going to see what we like about the investment idea. And we are going to start with the growing levels of passenger traffic. So I would like you to look at the red line in this slide, that is world annual traffic. It doubles every 15 years. And that despite crises, wars, terrorist attacks, epidemics, which is pretty impressive. And as we mentioned before, this growth is expected to continue at a 3.5% CAGR through to 2037. Obviously, this growth is expected to be more concentrated in emerging regions and especially in Asia. But what factors do explain this kind of growth we can expect? The first one will be propensity to travel, which is at multiple times lower in emerging regions than in developed one. So we should expect some convergence there. Also, the growth of the middle class, again, in emerging regions, and again, especially in Asia, will be another important factor. And last, aircraft productivity is currently at its highs, which we believe it's very difficult to improve from here. So we should expect a higher correlation between world annual traffic growth and aircraft deliveries in the future. The second thing we like about the idea will be Aercap's global platform. This platform is formed by 200 customers in over 80 countries. That means that Aercap has an unmatched information advantage in the sector. They know all the transactions that take place in the market. Just to give you an idea, they are able to lease one aircraft every working day and to sell or buy one aircraft every 2 days. So in the end, they know what airlines want to lease, what they want to buy, what they want to sell in almost real time. Also in this business, economies of scale is a very relevant factor. And Aercap is among the biggest customer for OEMs, so they're very happy to give Aercap important discounts on the purchasing prices of aircraft, and also favorable delivery terms. Again, just to give you an idea how important Aercap is for these OEMs, they are the world's biggest or largest lessor of the A320neo, and also the largest one of the 787 family. So they are very important for Boeing and Airbus. Also, scale is very relevant because it gives you access to capital markets, and this is vital in this business. Several years ago, lessors depended a lot on bank financing, so when things turned a little bit around and banks couldn't lend anymore, some lessors disappear. Now they have more flexibility thanks to this access to capital markets, thanks to the scale. And also worth to mention that some of the top lessors, including Aercap, has been able to achieve investment-grade credit rating, which is fantastic because you have a much deeper and broader market than the high-yield one. And last, but obviously not least, we believe that Aercap's team are the best capital allocators in the industry. These are the economics of the business. Aercap is able to earn close to 3% return on their aircraft, which may not be very impressive, but with a little help of our friend leverage, that converts into a return on equity of close to 12% on average. This is quite similar to some of the best American banks, as you know, but using less than half of their leverage. But in the end, we are talking about leverage here. We know it can be dangerous for the business, so we better understand how is it managed by the company. And the first thing to know is that Aercap has set target debt-to-equity ratio of less than 3 times in order to maintain their current investment grade rating. Also, they have a liquidity coverage ratio of over 1.2 times. And very important, contrary to banks, they do match assets and liabilities, and they do not assume interest rate risks. But what is special in the end about Aercap's team? Well, I think the slide talks by itself. They have created an outstanding value for the shareholders. Book value per share has grown at 22% CAGR under the management tenure. And we believe that 2 factors explain this value creation. The first one will be ILFC acquisition. It was a transformational deal for the company. It placed Aercap as the top lessor in the industry. And also, very important, it gave them access to the most in-demand new technology order book in the industry. And all of that at a very attractive valuation, because at that time, as you know, A&G, who was the owner of the company, was in very bad shape. And the second factor that will explain this value creation obviously will be the aggressive share repurchase programs done by the company whenever the stock is trading at discount to book value, which has happened in 2 periods. The first one, from 2011 to 2013, they bought back around 25% of the outstanding shares, creating a lot of value for the shareholders. And they are doing it again. From 2015 until now, they have bought back over 35% of the outstanding shares. And very important, they are financing these buybacks by selling aircraft at premium to book value in the secondary market. So in the end, they are selling aircraft at premium to buy back aircraft at discount, which as shareholders is something obviously we love to see. So we are going to do now a very quick review of what the market fears about the business and why we are okay with that. And we are going to start with demand risk. So one may think that current environment of volatile oil prices, trade wars, a strong dollar, will not be obviously the best one to be an airline. And that may explain why last year there were so many bankruptcies in the sector. But first thing to have in mind, bankruptcies do happen in the airline sector every year, and especially in Europe, 1 out of 3, not precisely an emerging region. And how does, more important, Aercap protect itself from this kind of risk? We have already talked about the global platform. They also have a very strict risk management policy when dealing with customers. And both of that should explain why they have utilization rates of close to 100% over the last 10 years. The other part of the equation, supply risk, the risk of OEMs overproducing. And I would like you to look at the graph on the left of the slide. The bars will be orders of new aircraft, that is cyclical. Deliveries, which are the gross red line in the graph, is not. They grow at a very steady pace. And that makes all the sense, because in the end we are talking about a duopoly made by Boeing and Airbus. And also they have a policy of no white tail, which means they only produce aircraft under order. And very important to know also, close to 45% of the deliveries expected for the next 20 years are just going to replace aircraft that is going to disappear in the market. Competition, obviously, could be another factor of risk. And it is true that this market is becoming more fragmented as time goes by. And these new lessors are being concentrating, especially in the sale and leaseback market. And just to give you an idea how overcrowded the market is, there have been situations in which 80 lessors have been competing for the same aircraft. 80 lessors, just crazy to imagine how overcrowded it is. And also another source of competition could come from financial institutions, financial investors, or leasing tourists, or as Mr. Kelly calls them, which are also entering in the sale and leaseback market because they find currently the leasing yields very attractive if we compare it to other asset yields. But two things to emphasize: they lack a global platform to manage a fleet. They lack also the experience. So when things turn a little bit around, we'll have to see what happens with this kind of competition. Obviously, Aercap is not playing this sale and leaseback game. They are, as we know, focusing on new technology orders, and they are taking advantage of the situation by selling aircraft at premium to book value to these thirsty investors. Also, residual value risk obviously could be another important factor to analyze. How does Aercap protect itself from it? We have already talked about it by focusing on narrow bodies, which are the more liquid aircraft, and also focusing in new technology aircraft, which are the most in demand by the industry at this moment. And also, they have a very conservative depreciation policy. In fact, I think it's the most conservative in the sector, which we think protect them a lot from this kind of risk. And the last one, obviously, could be financial risk. What happens if credit cycle peaks, if interest rates spike? Well, again, reality may be a bit different from what we have in our mind. Airlines are currently in their best shape ever. And also lessors are being currently managed in the most conservative way ever. And we have already talked about how Aercap match assets and liabilities and that they don't assume interest rate risk. Also, top lessors, including Aercap, has been able to achieve investment grade. So all these factors should give them a lot of flexibility to refinance debt without much problem if things turn a little bit around in the future. And just to finish, these are our valuation scenarios. I'm going to focus only in our base case, which is the one we are more comfortable with. We are obviously assuming that they are going to continue repurchasing shares, as they have already said several times they are going to do whenever the stock is trading at discount to book value. And we are also assuming that this repurchase of shares is going to be consistent with a debt-to-equity ratio of 2.7 times, which should be the low range of the guidance done by the company. And we are giving this business an exit multiple of 1.1 book value, which for us is a fair multiple for a business with a 12% return on equity. And with all of that, we believe that Aercap in a 3-year period could be trading around close to $100 per share, which is double their current price. So this is it. Thank you very much for your time, and I will be happy to try to help you with any question you may have.
The earnings and the ROE has been trending down. Can you comment on that in the last 3-4 years?
Could you start?
The earnings, the net earnings and the ROE has been trending down in the last 3-4 years. Can you comment on this? Is this a continuing trend or will that reverse?
No, what is happening is that there are new orders, new technology aircraft is entering in and that have lower yields for them. And also they have been selling a bit of less aircraft. They have achieved less net gains on the sales and they have impact a bit. But in the end, net income has been very stable, around 1,000 more or less. Thank you.